Hi and welcome back to the Forex Trader podcast. I'm your host Njabulo Nsibande. This podcast is aimed at helping new and experienced traders navigate the market and learn from other traders. In this week's episode, I'm chatting with Kholofelo Nkwana, a developing Forex trader, chatting to us about his experience. This is episode number 36. Please enjoy our conversation. Good afternoon, Kholofelo, man. How are you doing?
No, I'm good, man. I'm good. I'm trying, and everything is okay. How are you?
All is well, man. Can't complain. Can't complain too much. Call out death. So
Yeah, true. True that. Yes.
yeah. Man, quickly just take me through your journey into the market and what attracted you into trading in the first place.
Um, I think it started in late 2018. All right. Just after I had a health issue, so I was in hospital for a good 6 months. And obviously, because you are alone, you're isolated. In my condition, I had to be isolated. Then I went through some things, and social media, you see ads and everything like that. And I was like, "Shoo, okay. Um, so there is a way of making money in this way."
Mm-hmm.
And in any case, I was really interested. I'm more of a person who likes knowing how things are done and how things work. Sometimes I'll get interested in certain things just to understand how they work and just leave them, not because I want to make them part of my life per se.
Mm-hmm.
But with this one, it really caught my attention, and I started doing my own research and background. Um, then the very same year, I opened my account. I think my first account was this other broker. Uh, okay, I won't mention the name. Then then there was just a lot, you when you have a broker that sometimes manipulates your trades and everything like that. And when I started trading, to be quite honest with you, I had no knowledge about
Mm-hmm.
it. I just did my background check, as I said, and you realize that there are certain people that run signal services. You buy a signal and they tell you take the trade and manage it in this way, take profits, and so on and so forth. Then, with the little knowledge that I had, I went into it. I think that the guy was not even South African, if I remember well, right? And yeah, we made good profits. We made good profits, but with profits and with lack of understanding in terms of psychology of trading, you tend to want to expose yourself more, especially when you've had a good run of profits with that particular person at that time.
Mm-hmm.
Then started to have more exposure to my account, and eventually blew. When it blew, again, touching on the psychology part, you fund your account again, but you're not going with a clear mind. You're going with that mind of, I want to make that money that I just lost and more. And I did that and I blew accounts. So I don't know how many accounts I've blown. And after that, I was like, no, man, I need to understand this thing. And I need to understand how it
Mm-hmm.
works, without reading much about it, because I didn't have, with the type of profession that I'm in, I can't really spend a lot of time in front of a computer. I think it was in 2019, if I remember well, where um, I was invited by Jose. He said we must go to the JSE. You guys were hosting something there with the Simons, and we came there and started to understand certain things about also investing. And I was like, no, I need to really take this into um, have some seriousness towards this.
Mm-hmm.
And I started reading some books, strategies there and there. You read about Elliot, you read about chart patterns, but you don't really know how to put it together because you are trying to teach yourself by yourself alone. So
Yeah.
I've never had really a mentor in at some point, so to say, and collecting PDFs there and there. You find some ebook, someone saying, no, I've actually compiled this free ebook, so read this and that. But still, it didn't really give you an understanding as to, or rather, give me an understanding as to how this thing works. Then I stopped funding accounts. Eventually in 2019, that's when I realized I've made like huge. Because now when you look back and you're like, I've had this account, $1,000 blown. I've had this account, $500 blown. By the time you combine that money, you're like, wow, so much money is gone, and I can't really account for it because I don't even know where it went, And I pulled back. I started becoming more active on Twitter. And this one time I saw a post by oh yes. So what I would do to see the post, it was accidental, So I would go on Twitter and check for a hashtag, for instance, hashtag USDJPY, and see what other people are thinking. And that's when you see like people all over the world and different strategies as well. Fine. Then I saw this other one called FX Action, and I realized that it was on a different platform. It was on a Discord. Then I joined Discord. When I joined the Discord group, I realized that it's a community of traders that are doing their own thing. Some are professional traders, some are handling even bigger accounts. So I was just a spectator in the group for quite some time. Then I also tried to contribute where I could, because they didn't really have like specific people that they wanted them to contribute. Like whoever is part of the community could be just anything. So the rule is that you send your setups, your befores and afters when you can. You hardly send your profits because they don't want to see that, because they know that they are novice traders like me at the time, who might be influenced about what you're making and also make them make wrong decisions, right?
Okay.
Then first things first, I left Instagram, or I really unfollowed everyone that was a trader on Instagram. Also with my Twitter account, I did that. Then I started focusing on one thing, the community. And I realized different strategies that people were posting and everything like that. But the one in particular that caught my attention was a supply and demand, trading zones and everything like that. And what I liked about it is that when in the little reading that I did, is that you would understand how a day trader is like, how a scalper is like, how a swing trader or a position trader is like, and you had to look into your life and try to see as to where can you best fit in. And where I was like, I would love to be a position trader at some point, but for now, let me start where I can. And I started with day trading eventually with them. We hope that I'll be a swing, which now I really making progress in that. Then, but obviously, I knew quite a few things. So I would I'll take someone's setup and try to plot all the markings that they have, so that I sort of try to understand, because at the time I didn't have any course that I attended. I didn't have any information about it and everything like that. Then that was 2019. And I met this gent called Ross. I mostly trade with him now. So it was accidental as well. So he posted something, a chart on Twitter. And when he posted that chart, I was like, I've seen this chart in the group, in the community before, or rather how you have executed your plotting of things there. And I contacted him. I was like, hey man, I like your work. I really respect the strategy. I love it a bit, because it really gives you a different outlook, and it removes you away from the desk, and also tampering with your trades as they're running. Then he's like, no man, actually I want a few guys that I can work with. I was like, no, sharp. I'm happy with that. And we started having classes for free for a good 6 months. And he was like, hey guys, I've given you enough information and knowledge. Trading is a learner's journey. So in as much as I can teach you, but I can't help you understand certain things, you will have to do that by yourself. And that was June 2020. So I started profiting, and profiting and profiting without quantifying. my losses in all the accounts that I have blown, but I was getting the sense that in a way I am breaking even to the losses, right?
Mm-hmm.
And I realized that to remain consistent is to understand why am I doing what I am doing and why should I do it in this way. And even when I find myself in groups, multiple groups, people have different strategies and everything like that, because of the exposure to the community that has different traders executing different trades at a different time, it really brought out that maturity in me that you shouldn't be influenced by what you see. If it doesn't fit into your plan and how you look at things, then just look at it as someone doing their own thing just in your presence.
Mm-hmm.
And yeah, we continued and continued and continued even now. So with the group that he had started at that time, I think we were 20, and eventually obviously people fall off. Sometimes when people you give them things for free, they appreciate them like that, or
Yeah.
they never really see the value that that information carries,
Mm-hmm.
um, until such a point they decide to try and see it. So from 20, it's the four of us left now, and we've been pushing and pushing in our separate ways, and also when we see opportunities, because we almost speak the same language in as far as trading is concerned. We do share charts, especially long-term views,
Mm-hmm.
based on how we trade. And up until today, where I find myself being, I still call myself a novice trader, but yeah, I'm getting somewhere with all the efforts that I have um, had, and with all the journey as I've experienced it.
Oh, okay. Yeah, it's quite an interesting story, man. You
Yeah.
mentioned that in the beginning, just like pretty much, I suppose everybody, you've been blowing
Yeah.
accounts on a consistent basis rather than making profits. With the benefit of
Yeah.
hindsight, what are some of the key things that you think caused you to keep blowing an account without necessarily seeing what was going wrong to change it then? Obviously, you've changed some of the things now. And what are some of the new things that have made you transition from being a consistent loser to now starting to gather some profits on a more consistent basis?
Uh, okay, I'll try also to try to push it back a bit. I think one thing that really frustrated me, particularly with signal buying, for instance,
Mm-hmm.
right? And I'll take it forward to when you have charts as well. With signal buying, it's more like buy at current market price, SL 10 pips,
Mm-hmm.
and TP 100 pips, right?
Mm-hmm.
And that's what you're gonna set. But you don't really know what informs that person to tell you whatever that they're telling you.
Yeah.
And you will obviously, because of maybe some few trades that you've won before, um, you would expose yourself even more, meaning now you're not even calculating as to how much you are standing to lose. You're just looking at the gaining and gaining and gaining. So that instant gratification thing just gets to you, and you
Mm-hmm.
want to execute as you can. Second to that is that not everything can be traded. Um, at that time, I thought everything could be traded, and there was no specific rules as to how do you approach a particular pair or instrument. Yeah, for instance, if we're having metals like gold and silver, you
Mm-hmm.
would go with the very same lot size that you would use in a particular forex pair, and that for me was another danger that I realized afterwards. With moving away from signals, when you have people sending you also charts, until you understand what the chart is saying to you by just looking at it without any written information and so on and so forth, that was one of the things that I think I suffered from, because I couldn't really understand. Um, there were rules in terms of understanding what is likely to be a head and shoulder, what should you see or what should you not see. So
Mm-hmm.
even if your signal provider is wrong, because not everyone would know everything and in this fight market is concerned, you would not know how to control that. You would just go with whatever that they're giving you, and you don't know because you don't know as to how do you protect yourself from any eventualities, especially that goes against you. Because to them, they know that their buffer, or rather their cushion, could be that these people are buying signals. If it's 500 people buying signals at 1,500, because I think the last signal that I bought, I was buying for 1,500 a month. They know that they can always rebuild their accounts and so on and so forth. And for me, especially, you rely on salary. You need to figure out as to how am I going to get this. And so I had to learn. And I had to control my thinking around trading. I needed to be realistic with that it's probabilities. And as many books would always say, it's a zero-sum game. For one to win, one has to lose. So you have to choose as to which side are you, right? And obviously that side doesn't depend on you only. It depends also on the market and how it works. But what is more important, or what I'm trying to get to, is that I needed to understand as to if I am on the losing side in this zero-sum game, how much of losses do I intend to experience, and what informs those losses, and how will I overcome those losses? You get what I mean? So it had more to do with me understanding how the market really works from a psychological point of view, because you can in the very same rate that I could make. I remember this one time I flipped $100 in a week, and I flipped it to $1,000. And I was like, wow, means I'm getting the hang of this thing. It didn't take me long to blow that $1,000. In the next week, I blew the $1,000, and I couldn't understand. I was like, I could have just withdrawn and started with another 100. Maybe I would have had a different strategy in terms of exposing myself to the market. But look at myself now. And so I had to self-critique, as much as it's not nice, but I had to have that willpower and courage to self-critique myself as you lost because of you did this and that. The market didn't do anything. It's expected that the market will be manipulated. If it's manipulated, it will have some reaction due to macroeconomics and so on and so forth. But in that happening, because we know that it's supposed to happen, you were also part to exposing your account in the way that you shouldn't have, and now you've blown. So that in itself started to bring out a more responsible person in me, or rather as a trader, and say, you know what, you shouldn't do this. You never do this. And I've sort of created rules because of the many people that I know trading. I have created sort of rules to protect myself from just being influenced by whatever that they come with towards me, so that I still maintain in the way that I have set those rules. And even when I have made a mistake or things go against me, I can go back and reflect and say, it's because of this and that. Now we learn. We're not only taking it as a loss, but we're also taking it as a lesson. So yeah.
Oh, okay, got you. And then and then I suppose, listening to you, risk management was one of the key things that was a shift in terms of from being a consistently losing trader to now gathering more profits on a constant basis. Am I correct in saying that?
Yeah, true.
Okay. So take me through your approach into the market and your strategy, including the rules that you just alluded to.
Okay. So I trade supply and demand. That's my core strategy, including other chat patterns, but those chat patterns would be more informative in a sense of where are we likely to go to, or how are we going to get to those area of interest for me. So
Okay.
I really don't complicate my trading. It's just a clear mechanical way where I don't use indicators. I use really nothing except for my head and looking at what the market has left as information for me to consider. So I know many because of trying to teach myself how to trade, that has also helped me to in a way, helped me by exposing me to other strategies. And I took just a few things that I felt that they could work. For instance, in Elliott, where you see certain waves, how they are counted, or corrections in their ABCs, and so on and so forth. So that was some of the things. So those were some of the things that were things that I took from other strategies and tried to infuse in my own strategy so that I understand certain things, right? So supply and demand, with a bit of chart patterns like your head and shoulders, Quasimodos, whip shows, but those are not really done okay quite often. And I'm a swing trader. I only look at higher time frames for me to get involved in certain trades. I would look at your weekly, and when I see a particular zone that is likely to be something um, or worth trading, then I would move lower to the to the other time frames. And in understanding that the market happens in fractals, it has taught me that we might be at a certain level, but because of we're still moving to the level that I desire to get involved in, I might, in a way, trade in an opposite side that I intend to trade in, just so that we cover that, right? So you might find that the weekly still in a downtrend, but the market needs to correct on daily or H4. Maybe I might get involved in that and still continue with what I've seen based on the weekly. My rules are quite simple. I don't like complicating things. Once the market proves that that zone is not the one, I never force to make it the one. So I don't trade what I think, I trade what I see. And in terms of risk management as well, I I try to not expose myself too much. I'm still working on the percentages. Sometimes it's 2%, sometimes it's 5%. It depends on the confidence, I would think. And I think I need to work on that, because I use the word confidence loosely in this way. Because sometimes it could be that you're trying to prove a point that it should be in this way. So it sort of moves me away from thinking or from knowing exactly that it's not about me knowing. It's about me seeing it happen. So yeah, between 2 to 5%, I would expose myself, prepare, and depending as well as to how the market moves, when it corrects, makes breakouts, maybe I might get involved, maybe I might not. However, I prefer to get involved in with one position and just let it run. Soon as I see that we are breaking structures, there are rules in terms of how do I place my stop loss. So if I get involved in a trade and it hasn't maybe broken the structure, I might still be having that stop loss position the way it was initially. And when I see that the market is really moving, that's when I start moving to break even. And I just let it run, and I become very patient with my trade. Sometimes I hold for a week, 2 weeks. I think it's the most that I've done. Yeah, but I haven't really done 3 weeks or a month. I'm still working on that.
Okay. So you mentioned that you like letting your winners run. Do you add into your winning positions? And if so, what informs you to, okay, now I need to add into this position? And also, how do you handle exits once you in the trade? Do you take profits or losses at predefined levels, or you flexible with those?
Okay. The first question, I had to understand market structure, right? And soon as I did that, it was part of a way that informs how do I manage my trades. Like I mentioned, I wouldn't manage a trade when I haven't seen that it has surpassed certain levels and so on and so forth, right? So once it has broken market structure, that's when I will start moving my stop loss. My stop loss often it's a few pips just above a break even, because I know that when it has moved in the way that I expect it to, or in a way that it informs me to move my stop loss, the likelihood of it coming back is very slim as compared to it continuing, right? Sometimes it does come back, but I that's where like the lessons come. It's not a loss, even if it was in profit, good profit, and it comes back, then it was not a loss. It's just another lesson that teaches me that this thing can actually happen in this way. When I add positions, I hardly do, but when I do, it's because of I'm looking at also certain demand zones, whether they are minor demand zones or supply zones, or whether they are continuation, because obviously supply and demand has its own zones, and they are called reversals, and there are those that are continuation. If there is any zone that is like continuation and it really gives me a confluence to get involved there, I would. However, I would lessen my exposure, because that what that does is that if it goes against me, then it means I have pretty much a bit lost, and also that sometimes impacts my stop loss positioning, because once I have placed another trade, then both positions need to be on the latest stop loss, and of which sometimes it might cut out on the potential returns or profits that I would have realized if I had just one trade that I had a good risk reward with. In terms of TPs I always anticipate positions that I would like to get involved in, and I really place my trades in that way. When I have set out exactly how I see this trade, I am going to play it like that without tampering with it. Unless I start seeing some signals or patterns of reversal. And where it's necessary for me, I do take my profits manually. Where it's not, I let the market go for the price and TP from there. But if I were to compare between the two, often than not, I take my profits manually than having the TP to hit.
Oh, okay, got you. In your previous response, you mentioned confidence. To your credit, and you did say that you use the word quite lightly, and I found that in many traders they tend to increase their risk because of as you say, confidence. In your opinion, or in your strategy, or in your rules, what informs that confidence to say, okay, on this particular trade, I'm risking, the max I can on a trade, which is, in your case, 5%, or in this particular trade, I'm risking 2%, because, in my mind, whether you're confident or not, the outcome of that one trade is still as random as the trade that you were low on confidence in. So in your instance, what informs that confidence? Is it perhaps a run of winning trades or losing trades prior to taking that trade, or is it a combination of confirmation setups that you see in the market?
Yeah. So for me, it really doesn't come with other trades that are running, but it has to do much more with that particular instrument or forex pair. The amount of, or rather, how much of confluence comes with that particular level that I want to get involved in, and also if I see that it's going to give me a good risk reward ratio, I might really increase. For instance, let's say I'm getting involved in a position and I see that if I were to risk here, if it goes against me, it's 100 pips. That would be treated differently to the one that when it goes against me, it's like 50 pips or 30 pips. Because there are those that you like, when you get involved, you see that the only time that the market will change its structure and nullify the view that you have or the outlook that you have, it's when it has broken this level. So sometimes the confidence of increasing my exposure comes with that. If I see
Oh,
that, if I see that the risk is not as heavy as other trades, then I would really get involved quite with my max type of exposure. But if not, I would just let it go. Initially,
oh.
in my past life, it would be my, if I see Njabulo also having a trade like that, or say sell this particular pair without even seeing what he has seen, I would just go in and really expose myself pretty much in a way that I shouldn't. So I have worked on that. So for me, it's all about what am I seeing? What is the chart showing me? What are the candles saying to me? And I go with that.
Oh, so if your stop is tight enough, you would, increase that risk a little bit.
Yeah, I would, because yeah, I would.
Okay, so you trading forex, and forex is a continuous market. How do you handle overnight risk in when you're holding positions for 3, 4, 5 weeks, as the case may be?
Yeah, actually, bringing some
Or,
memories.
or rather, how do you sleep well at night?
Yeah, that's what I'm saying. You're bringing up some bad memories. I remember this one night. I think it was last year, if I'm not mistaken. No, it was the year before. I was trading nicely. Um, NZD cross pairs. I think I had quite three of them. That's a huge exposure to one particular currency, which was New Zealand dollar. And it was okay. It was moving and it was moving for me. And I was in good profits. Then I slept. I didn't have a problem. I didn't have that thing that says uh, anxiety. And I think I was well in trading at that time to understand that, whatever that happens, happens. However, that particular night, I was not ready for what was about to happen. There were interest rates releases for for New Zealand. Another time, I was I don't really rely much on what economic news are happening and today what is being released and so on and so forth. So I would just trade based on what I would really confine myself to the technical way of trading, right? So that night I slept in good profits. I was like, no, I'm just gonna let my trades. I'll wake up in really good profits. Little did I know that there were interest rates around 1 a.m., 2 a.m. I was asleep, and normally I would wake up around 3, my sleep break. When I woke up, it was all red, and I panicked. I panicked. I was like, flip. We are no longer in floating profits. Now we are in floating losses. Should I close? It means I'm accepting that I'm taking this loss. And the back of my mind, I'm like, you know what? The market doesn't move in a straight line. It reverses, it goes forward, impulsive, reverses, and so on and so forth. I'm like, let me sleep. I'll see it in the morning. Probably it would have reversed. Even if it's small wins, I'll just take that and move out. I didn't do that. Then I had to take the loss. It was quite a lot of money at that time. I think that the rand was also the exchange rate between the rand and the dollar was pretty high at that time of 17 rands, 18 rands at that time. So when I calculated how much I had lost in a day and the fact that I had to make peace with that was a wake up call for me that um, you don't want yourself looking at your phone. And I'm coming to the night part constantly during the day. So I started having a routine that once I've placed a trade, or if I have running trade, I give myself 4 hours because of the trader that I am. I'm giving myself 4 hours. That's the next time that I would open my MT4, MT5. And I started acclimatizing into that routine. And it eventually became less and less now. Like I would open my trades and just let them during the day and go and hang with people and do whatever that I want to do without really constantly opening the phone and the MTs, uh, besides maybe if someone like my friend who I trade with telling me that look at this particular pair, we might have an opportunity to get involved here. And that also transitioned into the night. Like I said, how I manage my trades. If I have a running trade, if I'm placing it at that time, the expected stop loss, or rather losses, would be based on the stop loss. And if it moves in a particular direction or in my favor, in a way that it breaks structures, depending on lower time frames, then I would move my stop losses to break even. And if it goes against me, then I would have obviously not lost anything. But if it goes with me, then it goes with me. And that has really removed me and my emotions into the forex market as it runs, and disturbing my life as I live it, my livelihood. So that's how I've always managed it. Even now, that's how I go with it.
Oh, okay.
Before I sleep, I open my chart for the last time. I sleep. When I wake up, the first thing I'll open, okay, and that's it.
At least knowing that your stop losses are in place, and if anything happens, you'll be hit at your predefined calculated loss.
Yeah, I think at some point, Jabs, if I can add this, I think at some point I had to realize that it's all in my head. And once I can control what I think about certain things and how they rule me or push me to do certain things, that's when I can be able to focus, to accept that a loss will be realized. It's not always that I will win. Um, Wins will happen, and it's not always that there would be also losses. So it's always that balance. But that balance, when it happens, you have to know exactly that between the two sides, if you were to experience either of them because of how the market runs, how much of your balance would really get affected by that? So, and I decided that when it's losses, I don't want my balance to get really affected. But when it's wins, that's when I want it to be affected and to grow and grow and grow. So I'm really quite specific in how I follow my stop losses and risk management, and also exposure to the market and controlling all those things, because sometimes you become so impatient. You can have really 70% retracement of your trade. But if you had told yourself that if this trade if I were to exit this trade, it's only when it taken me with stop loss, either on the expected loss or on BE. Even if it retraces 70% or 80%, and I'm watching it, I'll never be shaken to close it manually. I'd rather be taken out by the market.
Yeah. Okay. Got you, man. Um, uh, is your long-term discretionary investment portfolio uh, um, any different or impacted in any way by the technical analysis that you make in the market, or those are two just distinct portfolios and are not interrelated?
Um, they are in a way, because I would look at. I have started actually, and I would be honest with you. You are one of the influences that made me to start looking at that. Although I know that perhaps in your sense, because or rather what I'm exposed to when I see your charts from all the platforms, is that you are trading them, right? But also that in itself, because of I could see that chart patterns happen even in that. It also gave me that thinking that perhaps before we can get involved, even if it's for investing, let's rather wait for certain levels that would be good for us to buy. Um, so it does to some extent, but yeah, it's not really that much, because I started last year, and I was quite surprised when I looked at my portfolio and I've seen that it has grown by 43%, and I was shocked. I was like, wow, uh, that's not a bad start. So I don't apply the very same rules that I apply on my investments, but in terms of looking at the charts, I don't just fly into buying things when I don't know why am I buying them. And obviously, different approach also requires, in terms of investing, it requires a different approach where you have to really look into the company that you're buying in as to what is happening, what are the news saying, because you might be buying into something that will never exist in the long run or in a few. So that has taken me back in looking at some fundamentals, and yeah, for that only I do that. So different strategies and approaches is what I come forth with when I do the investing and the trading.
Oh, okay, got you. And throughout our conversation, I'm picking up that one of the key shifts that you've made was more psychological than technical. What made you realize that your edge or your holy grail is more centered around the change in how you approach the market psychologically?
Yeah, two things I think, or rather three things that I would say. And it was largely because of where I was exposed, the people that saw trading. One would be the community, the Forex community that I was in. And, in as much as they say we are a community and we are doing this and that, the sense there is that it's all on you. Whether you've taken the trade or not, it's all on you. Whether you've won or managed it well or lost, it's still on you. Whether you understood what the chart was or didn't, it's still all on you. And what also added to that, because subsequent to that, I met my friend Ras. He constantly said, guys, it's always on you. Trading is a learner's journey. You will, even if we are going to learn from the same course, the approach and application of certain things is all on you, because that subjectivity will also come. You won't always try to be as objective as you can, right? And even with my friends, my close friends, I constantly tell them and remind them that, guys, it's all on you. I might tell you that I found this and that, or maybe I've realized this and that. If your thinking towards it doesn't translate to what I'm saying, you are likely not to take it. And I have accepted that, in as much as I feel like I could have control over certain things. But you get to understand that you have to accept some level that there are certain things that are in your control, and there are certain things that are not in your control. And how I had to understand that is that I do sometimes read a few books, and Sun Tzu. I think there's a quote that you know yourself and you know the enemy, and a lot of battles will be won. So I had to learn and understand how the market operates, even though I don't understand it in its entirety. But towards me, I had to understand what that is, right? And how it works and how it can affect me. And look into myself and say, in understanding how the market works and how it can affect me, what is it that I am going to do to win a lot of battles that I might come across with? You get what I mean? So there's a point again that I would like to emphasize on that point that I just mentioned. In I think mathematics and physics, Jebs, you would remember that when they teach you an equation, they will first make you understand it. And by the time they examine you about understanding that equation, they won't give it as they did or how they taught you at that particular moment. They would try and make you find something that you were not used to find, or maybe a variable that you were not used to into finding. So I had to understand things in that way, that once I understand how everything works, how do I make it work for me? And for me, I understood that everything is just in my head. being influenced by other external traders, that is in my head. Being able to control what I do with my money and my trade, it's all in my head. Whatever that I'm likely to realize, whether it's the returns or the rewards or the risk, also should be shaped by my head. Because if I outsource my thinking, if I relieve myself from some of the responsibilities, I'm likely not to know myself in a long run. And that's what you need to remain consistent in this whole thing, in term trading.
Oh, okay. Yeah. I like your response quite a lot, especially the part where you talk about taking responsibility for your actions.
Yeah,
In many books that I've read on trading, that's one of the key things that they try to drive home in some taking responsibility of your actions in the market, because it's true what it's really true what they say. Nothing starts until you make it start, and nothing stops until you make it stop. And how big or small the impact that experience will have on you in terms of your bottom line is also entirely dependent on you. um what which on your trading, which parts are you taking responsibilities for, and which parts are you not taking responsibility abilities for? In other words, what are some of the things that you don't beat yourself up on? You take it as that's what the market does, or whatever the case may be. And what are some of the parts where you really beat as you said earlier, critique yourself in terms of, okay, I'm taking responsibility for this because I did 1, 2, 3 wrong.
yeah. Um, I think where I take a lot of responsibility would be, um, first and foremost, obviously, because of I do like top-down analysis. Sometimes I'll be lazy and not really do it in the way that my plan requires me to, and I would miss a few some of a few information that is available on the chart, right? And that also puts me in a position where the market goes against me, and I would self-critique and I'd say, but you didn't do what you needed to do. You didn't label the things that you were supposed to label. That's why you couldn't see them. And even when it went against you, you are the one who's responsible. Now you've lost all this money because of your negligence and stuff like that. Next time you shouldn't be doing that. Where I would never take responsibility is as in how the market moves. I have absolute no control over that. I'm just getting involved in what I think is likely to happen. So it's just all about probabilities. And when it's not the one that I had anticipated, definitely would be the opposite of it. So in that sense, for me, the things that I am able to control or that I have serious control in, that's where when I haven't done them, I would really self-critique. But those that I know that I have absolute no control on, I would just let them be as they should. More like your market moves, manipulations, news releases. I don't decide what interest rate should be in a particular country and how the investors must react to that.
Yeah.
Frenzies. Sometimes you see market frenzies happening where people are just buying this and buying that. But if I know I've never had any interest in buying is other when the market was really moving in funny movements in the last few weeks. I had no interest in all those companies and how people were deciding to buy into them. So I had control over that, and I wouldn't expose myself to the market because I had no interest and any understanding. I would read as to what are people doing, but because it had nothing to do with my objectives, I let it slide. But those that I have no control over, definitely I'll never self-critique myself on them. So that's how I move.
Oh, okay, got you. That's quite interesting. Do you still emotionally, from an emotional perspective, feel elated whenever you find yourself in a winning position, or uh, uh, um, uh, uh, deflated, or for lack of a better term, when you find yourself
Yeah,
in a losing position? Do you
in
still,
losses.
yeah, do you still feel happy or sad, as the case may be, or it's just now part of like, you know,
Ah,
part of the probabilities that
I think I
present
think I, I
themselves?
think it goes both ways, Jabs. There are days where when you're having consistent wins, you're like, oh, nice. It's pretty nice, and you constantly um, moving money and you still continuing with your account as healthy as it could be at
Hmm.
that time. That's very nice. Um, and where you make losses, I think I take them with a pinch of salt. Um, Losses are not nice. No one wants to realize them, but the reality is that we will all have to realize them as they come. So, yeah. But I do get excited. Actually, this would be the first time that I sort of publicly show that I trade and everything like that. And I think this one, the reason why I'm mentioning this, I want to take it back to some of the question that you asked about the psychology. So
Hmm.
part of my in harnessing my psychology, literally few people, maybe I could count them in one hand, knew that I do trade, and that has taught me in how I see other people, like sharing your profits, sharing your setups, and everything like that. So all the time, it was more of a a closed system and close to myself. And I think that also helped me to control that I'm not proving any point to anyone. This is
Yeah.
all about me. And whatever that is going to happen here, it's all about you. And those that are close to me, those are fellow traders, because they know how this thing works. Even when I tell them, I say, hey, I've lost so much amount of money, they would understand and say, hey, reflect and see why you lost. So that helped me as well in terms of controlling my psychology and risk exposure.
Oh, okay, got you. Lastly, man, before I let you go, what are some of the resources that you still, or content that you still consume in order to improve your trading?
um, I do involved in groups that normally trade my strategies. um, Set and forget, your HLZ, your Hanzos, communities that are free, that people are exchanging information, you learn a few things.
Hmm.
Um, I read books about obviously the psychology. Um, I remember in one community they given us there was a book about poker, um, but it was not really related to trading, but the principles and how you would work on your psychology really involved or could also come in hand with trading. So I even go back even to the old books, the ones that I've read, old videos that I have actually had. Sometimes I try to put myself in a position where I'm trying to teach someone, because
Um,
when I'm constantly telling myself, I feel like I know everything. Hence, I sometimes neglect plotting certain things. But when you feel like you're teaching someone something, you become so firm in your basics and you always build on that. So with my basics, I never let go of those. I'll never get in a traders until it touches on my basics. So I still read old material that I read before. Maybe
mhm.
I didn't have the proper understanding back then, and maybe now I might. Sometimes even when I make losses, losses sometimes will take you back to your material. So I would go back to my I would go back to my material and like, yo, that was a heavy loss. Why did it happen? So the answers sometimes are also in some of the information that you've neglected when you were looking at the particular book of your strategy or the notes that you've made or the videos that you have. So I still look into that and new information, understanding other strategies. I'm still trying to understand how the entire Elliott wave counting works. In as much as I'm not really interested in it per se, or maybe it's really important in my strategy, but having to understand it. So I like more of knowing one thing about everything than everything about one thing. I think everything about one thing would limit you. Even when I come across someone, I can have a conversation based on what they know.
No.
But when I have at least a single thing that I can say toward them that can help us maintain that conversation. So I take that in most of most parts of my life, that I try to keep myself as informed as I can, even with other things that are unrelated to my strategy, with the hope that it will add some value.
Okay, got you, man, got you. And what are some of your firstly, is the book you're referring to Thinking in Bets, the one about poker?
Yeah, I'm losing the. But let me check because the title sometimes escapes me.
Because I
Uh,
haven't read that book, but I hear it's one of the non-trading books that helps traders a lot. Thinking in Bets.
yes, yes, yes. So I have read two. I have read three books. One was by Ryan Holiday. It's called Ego is the Enemy, right? Has nothing to do with trading. It's just about life and how you should carry yourself. But it also adds that you shouldn't feel like you're a big man, or even the smallest returns that you see, even if you're making 1,000 rands today.
Yeah.
Don't ever think that you are superior. Than just remain as humble as you can, because it might derail you from seeing the bigger picture because of whatever that you realize now.
Oh,
The two books that I got from the community was The Mental Game of Poker and The Mental Game of Poker 2. Yeah,
okay.
so those are the two books that I haven't finished. When I look at my phone now, I see I think I'm 20 in each book. So I still have to continue because I read quite a lot of books. Sometimes it goes with what I feel like at
Okay.
that time. So yeah, I have to really finish them. But with the amount of information that I have read now from those books, I could see where it's really pushing. Sometimes I watch videos, because yeah, a book sometimes can be tiring as compared to watching videos. You might grab a lot with videos and books. So yeah, that's me.
Okay, cool. Now, man, we'll park it here. Thank you very much for your time. I really, really appreciate
I
it.
really appreciate.
Is there anything you want to add before we close?
No, for me, there's really nothing, except that I appreciate the time that you also afforded me. I think this is a really good platform, that people can rely on and sort of be able to be realistic about things, because much more what we share here, it's all about our personal experiences. And often than not, when someone starts in trading, they never get to get that opportunity. Sometimes experiences should not be firsthand. Even when you share a story of someone, it can help you that you really look away from all those things that might find you in a bad state, in terms of losing your money, blowing accounts, um, uh, poor risk management. So you might have a better footing as compared to us that are sharing stories now, in terms of how do you get involved in this industry. A lot of people say it's all about scamming and so on and so forth. And for me, I think it should be understood why people come from that. But at the same time, the very same people have that responsibility of doing research and understanding how things work and how things are done. And I think your platform forms part of that um, um, research, where people, when they do it, they would come across this and understand that this is a real thing. It works. You should know yourself and why you in it. Um, what are the reasons you are in it, and what are the things that you would avoid based on the knowledge that the people have shared here. Thank you, Jobs.
All right. Now, thank you very much, man, for your time. I really, really appreciate it. And I really enjoyed this conversation, and I hope you enjoyed it as much as I
Yeah,
did.
I did.
Yeah, with that being said, man, that's it for the show this week. Thank you for hanging with us. Thank you, Kholofelo, for your time. Be sure not to miss another episode of the Village Trader podcast. By subscribing on your favorite podcatcher, we everywhere where if I can find some words, we are everywhere where good podcasts are aggregated. And do join us this evening as you're listening on Wednesday. Simon Brown and myself are doing a Follow the Trader series with ThinkMarkets. That's happening at 5:30 every Wednesday evening. I'll leave the link to that in the show notes below. Thank you, Kholofelo, for your time, and thank you for listening. Check you next time on the Village Trader. Cheers.